Hey everyone, welcome back to Corporate Decoder, the place where we dig into the documents businesses don't necessarily want you reading. Today we are diving into the Form 10K of TCW Direct Lending VIII LLC. And let me tell you, this one is a bit of a beast. We'll see if we can figure out what this report is really trying to say. This report is supposed to give us a deep dive into how TCW Direct Lending VIII LLC performed last year, what risks they face and what their plans are. But can we really trust what they tell us? Let's find out. First, let's talk about what this company actually does. TCW Direct Lending VIII LLC is basically a lender. They give out loans to middle market companies, meaning not the huge corporations, but also not your local mom and pop shop. They aim to make money from the interest on these loans. They are managed by TCW Asset Management Company LLC. It says here that TCW Private Credit Group launched this as their 8th direct lending fund, and it's led by Richard Miller and a team of other investment pros. They're looking for solid returns while trying to preserve the money they've already got. So how does TCW make money? Well, they get a management fee, which is 1.25% per year of the company's average gross assets. They also get an incentive fee, which is a cut of the profits after the investors hit a certain return. It gets a bit complicated, but think of it as a bonus for doing a good job, or at least for appearing to do a good job. They give a few examples on how the incentive fee works. So for every dollar of profit they earn, they get about 15%. That's pretty good. Now for the fun part, the risks. Like any financial operation, there are some risks to think about. One of the biggest ones is the market itself. If the economy tanks, the companies they've lent money to might go belly up, leading to losses for TCW. Also, things like interest rate hikes and credit crunches can make it tougher for them to operate. Another risk is the dependence on key people, especially Richard Miller and a few others. If they leave, the whole thing could be in trouble. That's because they don't have any employees, only use consultants like TCW Asset Management LLC, a sister company. It's all kept in the family. It's worth pointing out that TCW Direct Lending VIII LLC identifies as a non-accelerated filer, meaning they are not a huge, massive company. They are also an emerging growth company, so they take advantage of certain exemptions from rules to give them reduced disclosure and some other flexibilities. There were no disagreements about accounting practices, all standard stuff there. Let's move over to the more interesting numbers of the report. They have about $942 million of their investments in debt and a small portion in equity. They give loans to a variety of industries, but a larger portion is in containers and packaging at 12%. Food products make up 11%. Commercial services and supply comes in at 10%. These top sectors make up around 1/3 of the portfolio. So they don't spread their investment money that evenly across different industries. And so that comes in at 10%. These top sectors make up around 1/3 of the portfolio. So they don't spread their investment money that evenly across different industries. Now on to the numbers, the good stuff. For the year, they earned revenue of $136.3 million, much better than the $87.9 million the year before. This comes from the loans they're giving out to different companies. But it costs money to make money. Their expenses were $60.7 million, up from $41 million the previous year. Part of this cost comes from paying the advisor, which we just talked about. So after all that, the net increase in capital from operations ended up at $60.66 million. That's a decent chunk whacked. Now, what's my take on all this? TCW Direct Lending VIII LLC seems to be operating in a fairly standard way for this type of business. They're making money, but they have risks like any lender does. The reliance on key personnel is a valid concern, and the concentration in certain industries could amplify risks if one of those sectors tanks. They are an emerging growth company which brings some risks but also upsides. Overall, TCW Direct Lending VIII LLC is following the plan, it seems like, but you as an investor always have to consider the risks. Thanks for tuning in. If you found this deep dive useful, do the usual, hit like, comment and subscribe to the channel for more corporate insights.